If you're looking for a sign to start investing, this is it. Let's go. Hi guys, welcome back, and today we're discussing a topic which I know affects a lot of people, including some of you watching, probably more than I expect, because it concerns why most people never start investing. Okay, for this video I got a bit of a lighting change. I hope you like it, I hope it's good. Also, of course, I hit my head right when I have to film a video, so apologies for that. Anyway, back to the video. So according to a JP Morgan survey, 42% of people think that they do not have enough money to start investing. 38% don't know where to begin, 19% are too scared to lose money, and 17% prefer a savings account. Now, I want to go point by point and address all of these, as well as at the end I'll add a few of my own, and hopefully I can explain why these points, why the fears of people in reality are not that much of a hurdle as they believe it to be. Number one, I don't have enough money to invest. Now, a lot of people tend to think that you need hundreds of thousands of maybe millions of free money to invest in anything worthwhile, but that is not the case in the 21st century. Now, a lot of these platforms like Robinhood have made investing really accessible and really simple. The reality is that most of the time you just need to download an app, put some money in there and buy your first investment. That is it. And you can do that with 100 euros, $100, very little amount. Some platforms allow 50 or $50 or less. And you can buy partial shares, which means that if you want to buy a Google share, which one share is worth $3,000, you don't actually need to buy the whole share. You can buy a part of that, say 0.1 of a share, or however much money you have. And that way you can still invest despite not having enough money. And not only that, but it's actually very important that you start with small amounts and build the principles, build the mindset, build the technique that is needed for you to be successful in markets. Imagine, for example, you have $1 million out of nowhere. You've won the lottery or something. And then you want to invest that money, but you have no prior investing experience and you don't know what to do. And the responsibility of having that much money to invest without a clue of what and how to do is a much more scarier scenario to me than having a little bit to invest and just building up your confidence, building up your skill, building up your strategy and goals. And that way you can build your investing knowledge and investment portfolio from the ground up, which is a much more sustainable and long-term approach than doing it once you have collected a lot of money. In this video right here, I explain exactly how to create your account, how to put money in, and how to buy your first index fund. That is an easy step-by-step guide, so you don't have any excuses not to invest. Number two, I don't know where to begin. Again, really easy. Just buy a simple index fund of the S&P 500 and forget all your troubles. That is basically it. That is the best investment that you can make for the long term. And that is the advice that all the greats, including Ray Dalio, Warren Buffett, you name them, they all recommend you do that simple thing, just buy an index fund and forget about it. In this video right here, I discuss index funds and picking the right one for you. If you really have the desire to start investing, you will make the time to research, to inform yourself, to make up your own mind of what exactly is that you want to buy. Number three, I'm too scared to lose money. Now I want to make a distinction between trading and investing. If you're investing, you're looking at things in a long-term perspective, which is 10 plus years. If you are trading, you are speculating on the short-term value of a certain asset. If you are trading, your chances of losses are much higher than if you are investing for the long term. Let's say, for example, you've bought that S&P index fund. And after that, the market drops. So you have theoretical losses, but you do not realize that loss until you have actually sold your asset. But you won't sell it because you're holding on to the long term. It's down in the red for 6 months, 1 year, 2 years, 3 years. You still have your theoretical loss, but you have conviction So you say, I don't need this money, I'm holding out, it'll come back. And eventually it does. Despite being prone to corrections, looking at the historical data tells us that there is no period in the S&P 500 where an investment of 20 years has produced a loss. And in recent years, that period is even shorter. Long term, you will always win. Do not trade, invest. Number 4. 17% of people prefer a savings account. The notion of that in today's economy is absolutely mind-boggling to me, because most savings accounts yield less than 1% and some in Europe are actually negative. So the idea that you would keep your money in a savings account is absolutely ridiculous, especially when you have inflation over 6% currently. That means that you are underperforming inflation by a lot, and you are essentially losing money when you keep your cash in a savings account. And if you think that a savings account is safe, then that is an illusion as well, because as we know, 2008, Lehman Brothers, banks do go under and people do lose their money. And also, guys, there are 3 more points that I want to add from myself. These are concerns that I've heard from friends, from people I know that they've had about investing, and I want to add them to this video. Number 1, investing is too risky. This one is really difficult for me because I believe that safety is pretty much an illusion. Doing nothing is actually the riskiest thing. In an environment like today where inflation is very strong, doing nothing actually means that you are losing 6 to 7% of your purchasing power per year. You need to be doing something to at least offset that amount, otherwise you are going backwards. And like I've said before, trading is risky. You should make a difference between trading and investing. Investing, like I said, long-term, trading, short-term. Trading is very risky, yes indeed. Investing, less so. And I discussed the differences between those earlier. Another one that I hear very common is that investing is too complicated, too time-consuming, too intimidating. No. Money managers with expensive suits and fancy degrees have on purpose made it seem so. Because in that way, you are giving them your own money to manage and to earn a commission on. They are essentially taking a little piece out of your profits for their own personal gain. They are relying on your fear and ignorance to make money. Investing yourself in an index fund is not only extremely simple, but most of the time you will actually outperform those money managers, as historical data suggests. Right here, you can check that out. Historically, money managers, hedge funds, actively managed funds have not managed to beat the passive index fund S&P 500 over a longer, consistent period. So don't let them screw you out of your hard-earned profits. They are yours to keep, and you should not be paying a commission to anyone. Number 3, even if you have started investing, a lot of people think, this is not the right time, the market is very high, I should probably wait for things to cool off. And that was my thinking as well in the beginning when I started. But the reality is that time in the market is much more important than timing the right time to go in. So time in the market is much more important than timing. And there is plenty of data to support that, including a video that I made you can find right here. That video discusses the different types of strategies that people could potentially use to buy in the market, including buying at the best times possible or buying at the worst times possible compared to dollar cost averaging, or buying as soon as you have the money. And you will certainly be surprised by the results that this historically back-checked study has discovered. Like I said, I've done timing the market myself before, and I've discovered that it's totally not worth it, because had I started a little bit earlier than I did, I would have probably had an additional 10 to 15% rather than waiting for the perfect moment. And I know that now because it's in the past, and hindsight is a bit of a bitch. So the time to start is now. Anyway, guys, that's it for this video. I really hope you've enjoyed. I really hope you like the new lighting and stuff. And of course, as always, a like is much appreciated and actually very needed, because it tells the algorithm and myself that this stuff is actually good and useful. Yeah, I'll see you next video. Bye-bye.